All right, good morning, everyone. Sorry about slightly late start, and sorry for we had some technical difficulties yesterday. Couldn't get the call out to you. Okay, we're starting with last night's session. Really strong session for the most part. I say really strong. We started lower, drove higher. The finish wasn't fantastic, but overall, the market was very solid on the day. I think the most important thing is that we made new all-time closing highs on the Nasdaq. That's going all the way back 15 years, and obviously that's hugely important. At one point, we were at what would have been a new closing high in the S&P, so we did get up to that level, but we weren't able to capture a closing high. We're still just under that level. Once again, we had oil really running on the day. Off the lows already, I think in light sweet, if I'm not mistaken, we're up almost 45% or something along those lines. I think that we traded under 40. We're all the way up to 60 already. So we've had a hell of a run to this point we're just under 50. So we've only run about 20 odd percent. So we've had a proper run out of light sweet. We had PMI numbers that came in yesterday. They fell a little bit. Market was able to shake them off. But I think the big thing that we're still focusing on the moment is obviously earnings. We're watching to see if we're going to be able to come out of this earnings season unscathed in terms of managing to keep up with what are really, really low expectations. If you look at what happened in Asia overnight, we saw Shanghai finally give us some sort of correction. There's definitely been some real negatives that have hit there over the last two sessions. And I think what the scariest thing that happened is they let one of the state-owned or partially state-owned companies go under after a debt default. That's the first time that the market's seen that happen. If you look over the past 5 or 6 years in China, they've been on pretty much an IPO and international debt spree. They've been going all over the world, looking to borrow money, for so many of these companies, especially obviously some of the property developers and, many of the bigger state-owned enterprises have been going out and borrowing large chunks of money in the international space. That's starting to be a serious cause for concern. Now we have 2 companies going under in as many days in China, and the real fears of defaults there, I think, are starting to mount in the international space. So, if you start to see bond yields really run on a lot of that Chinese paper, it's going to create real pressure, most likely, on the stock market in the near term. All right, and if we see Australia this morning traded out really strongly. We had iron ore and oil prices up yesterday. We had big runs out of the miners yesterday after Anglo's came out with its trading update. They definitely, the market was, I think, indecisive on it initially because it was more or less in line. In fact, some other things I think were slightly lower than the market expected, but it wasn't a disaster. And we've been, to an extent, pricing in disaster for some of these shares. So you got a real run to the upside once the markets realized that the share couldn't really fall on the back of it. I think started to squeeze some of the shorts out toward the end of the session and really tacked on almost 5% in London. All right. If we look at our chart of interest on the day, you can see here this is showing a commodities market versus the S&P. And just looking at this historically, this is only going back to 2005, but if you look at this, throughout history, the correlations between the commodities basket and the S&P or most of the major indexes in the States are going to be very similar. And you can see there, I mean, they don't necessarily always move to the same degree, but they usually are moving at least in the same direction. And you can pretty much see every major fluctuation in the stock market going up until 2012 is very correlated. Like I said, it may not be going to the same percentage moves, but it's at least moving in the same direction. Since end of 2012, that correlation has totally broke down, and it's become just a massive divergence. This will not last forever, which I think is quite obvious. I do think that there's something that's different out there that makes this a bit of a special situation, and that's China. The fact of the matter is that China is the one that drove commodity prices to such an elevated level. And you can see there in 2010, 2011, that was China driving commodities to stupid levels. As you see China start to cool off, you're seeing commodity prices come down. So I don't necessarily think that this is as alarming as the chart normally would be, but it's something to look at nonetheless. I think that this will converge again at some point. Probably be a really interesting trade to put on, as a pair over the next year in small size, because I think at some point it will come back together. But the bottom line is it's very, very interesting. Normally, something like this, if it wasn't for the China situation, this would be a major, major idea for a lot of hedge funds. I think the China situation maybe takes it away a little bit, but something interesting to look at nonetheless. All right, corporate action today, none really to speak of. We do still have some more earnings out of the States, but we'll wait and see as those come out this afternoon. We had Japanese All Industry Activity Index actually better than expected. We've got the IFO numbers out of Germany at 10, business climate and expectations. So look out for those. Has obviously been market moving of late, and we've got durable goods orders in the States at 2:30. All right, let's get into the maps. I've got quite a decent amount of stuff to show you. Couple of the things spill over from yesterday. All right, so one is obviously the S&P 500. So I think there's two things to look at here. One, there's a little bit of horizontal resistance that we broke out of on the close, which was right at 2110. Finally closed above that, only just, but we did close above that yesterday. And obviously the next thing to look at here is new closing highs, which we didn't quite get to yesterday. If I'm not mistaken, the number is, let's just have a look, it's right there, 2117.39. Okay, so that's the number that we're going to look for. We missed that by 5 points in yesterday's session, and like I said, we did get up there intraday, but we weren't able to hold on to it. This chart is really shaping up to be a real bullish breakout again. You can see we've just been narrowing into this ascending triangle, starting to look like there's a significant amount of upside here if we break out. So just keep an eye on this one. It could really trigger, I think, a lot of shorts as well, because a lot of people have been very negative on the stock market, including myself. All right, going into, let's have a look at the NASDAQ, which also, as we said earlier, broke out new all-time closing highs. 50.42 on the NASDAQ was our previous closing high, here, at least for the year. I think all-time, obviously, close to around that level as well. So we've broken out there. I think if we go all the way back, we'll go to a 20-year monthly, you can see here, we've broken out as well in terms of, I don't know where the close was here because this is a monthly chart, but we made a new all-time closing high. I would assume it's somewhere up in this level. Bottom line is we're breaking out here on the NASDAQ, and I think that's, that's telling. That's something that it's been the leader for the last 2 or 3 years in global markets. And I think that you can continue to look for that for leadership, and if we continue to push higher, it's probably going to drag the rest of the globe higher as well. All right, moving on from that, let's look at our local index, which is also breaking out. It's a breakout frickin' party around here. Everything's been going higher. I think market up 5 or 6% in the month. It's just exploding. Obviously, we got a breakout the other day. We talked about when we came down and tested. We tested back, I think, toward the beginning of the month on that level. Then we turned higher nicely there. I just want to look here at yesterday's action. Let's throw it in on a 5-day, and you can really see here that that's not what I want to look at. Sorry. Okay. So we can look here on the 10-day. We broke out nicely there yesterday. At right around 8,400, you can see there was a beautiful little narrowing wedge. We're talking about it in-house with some of the guys yesterday during the day when we broke out there. A few of the guys were able to make some nice money off of this. Anyway, bottom line is if we look at the longer-term chart here, we'll back this out a little bit further, and you can see, we've got a massive, massive target on the Aussie, and I think that is something that we have to take note of. We're talking about upwards of 5,000 points on the breakout. So we could really just be getting started here. We've done about 700 or 800 points so far, as of this morning's open. I think there's more on the go here. maybe we get a correction back down to support at some point here, but the longer term charts are telling us that we're going higher. As many touches as we had here, this is starting to look really reminiscent of the breakout that we saw in the DAX, and we all know how that's played out over the last few sessions, or the last few months. Okay, let's look at BGA. This thing, to me, we're really kind of trying to predict here, but just something to keep an eye on because, obviously things can get there within a day, and then all of a sudden I feel like I'm coming to you too late with this. Around 195 is where I think there's a real neckline of an inverse head and shoulders. You can see here that that there's a real higher target there. If we break out above 195, I mean, we'd be looking at a target all the way up at about 215 or something like that on BGA, and the rest of the sector's flying. Standard Bank, First Rand, they're going nuts. So I think these things still maybe have a little bit of room to go. If you look at MediClinic, we talked about this breakout the other day, or the potential breakout coming. It actually broke out nicely. Then, not yesterday, day before yesterday, we came in, we actually dropped support a little bit intraday. We came back and we closed it on support, and that's been real typical of a lot of the stocks in our exchange of late. Have been those retests where it kind of drops the level intraday, but just, at the end of the day, they managed to get it back up to the level. It closes on the level, and then yesterday we took off. So I still think there's a lot of room to the upside on this one. I think that we can put maybe a 10 Rand upside on the breakout here, which would put us up around 139 on MediClinic. If we look at Billiton also making a breakout here. Now we're looking, same thing on the daily. In terms of there's really been a consolidation going on here for the past 2 months. I think we've put in a bull flag here. Yesterday we absolutely exploded with the rest of the mining sector. I don't see any reason why we don't take out recent highs, which are at 295. So I think we can maybe make a quick move up to 300 on Billiton. If you look at CFR traded terribly yesterday, but the day before we had this huge reversal. So they had numbers. They had their full year numbers were a big miss, but operationally everything seemed to be fine. We talked about it, I think, before that morning, that didn't really know how the market was going to take it because operationally things were solid, but the full year numbers were a bit of a shocker. So we opened up down about 2.5%, and we over the course of the day we made a long grind back to close well above 105. I'm going to close all the way up at 106 and change yesterday. Maybe this is another one of those retests, kind of like we saw in MediClinic after the breakout. But this breakout at 105 is definitive any way you slice it. I think that the target here is over 110 on the breakout. So let's we'll keep an eye on this one for the next couple of weeks. And Sasol as well. Sasol, big level here at 480 yesterday, or not yesterday, sorry. Earlier, I think it was the end of last week, we came up, we made a breakout here at intraday at 485, failed it intraday. We came back and put a full test in two days ago at 460. We talked about this one. This was one of the ones that I was going to show yesterday at support here at 460, which is very clear support. I think that basically just gap filling there. If we break out above 480, there's nothing but air above this for a while, and it's a very big target. Investec had a big upgrade of this thing the other day, throwing out a 550 price target. So, I think there's probably still a lot of people caught short there. I wouldn't be surprised with this oil price running if this stretches legs as well. And the last one I'm going to show is MTN. So you got MTN here, 225. We spent 5 or 6 days consolidating here after we broke up to 230. We came down, we traded 1, 2, 3, 4 days in a row. We traded at 225 yesterday. They came out with numbers. A little bit disappointing, but remember, this thing's been being priced, I think, for a long time for disappointing numbers. They come out, they traded down around 224 on the open, and you could see there was no follow through on the selling. So all the guys that were short in there in the morning got trampled. Huge reversal, closing at highs going all the way back to November of last year. I think it's for me, I think there's still big upside left technically here. I don't even want to throw a number out here, but I think there's considerable upside left on MTN, provided the market conditions stay the way they are. And that's it for today, guys. Good luck.